How did Bitcoin catch your attention?
It was his best fixed income manager. One time we were out to lunch together and he confided in me that he was personally heavily invested in Bitcoin, but couldn't talk about it professionally. And couldn't put it in client portfolios and stuff like that. I was like, wow, this guy that I respect so much is, heavily invested in Bitcoin. Okay, I got to take a proper look at this.
Hey everyone, I'm joined by my co-host Harris Irfan, and we got a special guest today, Glenn Cameron, ex-Cartwright, on-ramp head of global institutional, asset management, and pension pioneer. Glenn, great to have you.
Thanks for having me, guys. I'm looking forward to this.
Great. Shall we just jump straight into the questions? Tell us about your career, because you come from TradFi, and particularly with asset management. So you've moved into the Bitcoin world. Tell us about that.
My career is quite a long one now. It's almost 3 decades. I started as a fixed income derivatives trader at a prop firm. I then transitioned to institutional investment consulting at an American firm called Wilshire Associates, but here in London. And I was kind of promoted up the ranks there to senior associate and then head of equity analytics. I dealt with a lot of European pension schemes, a couple of Middle Eastern sovereign wealth funds, a couple of central banks in that role. And then after that, I became Old Mutual's head of investment consulting. And there I really sort of deepened my knowledge in the pension space, but other institutional investor types too, including endowments, foundations, and mining rehabilitation trusts. Also redesigned their private wealth offering while I was there. More recently, I served as a portfolio manager at Sanlam International, managing multi-asset class portfolios. I was the chair of their asset allocation committee. So in that role, I was responsible for setting asset allocation policies across all the firm's portfolios. That obviously requires constant analysis of macroeconomic trends, asset class valuations, tactical asset allocation, risk management, portfolio optimization, that sort of thing. And then in my last role, I was a senior investment consultant and head of digital assets at Cartwright, which is an institutional investment consulting firm here in London. And there I was working exclusively with defined benefit pension schemes, designing the investment strategies and managing all of the implementation and risk management, etc. And also as a big part of that role, I was educating clients, so boards of trustees at defined benefit pension schemes on Bitcoin and advising them where appropriate on making an allocation to Bitcoin. And as you mentioned, now I've joined OnRamp, serving as the global head of OnRamp Institutional, and again, educating and advising all institutional investment types on including Bitcoin in their portfolios and how to operationalize and custody the Bitcoin in the most robust ways possible.
That's super interesting. A lot of financial jargon there, a lot of, really lengthy career in traditional finance. So the big question, how did Bitcoin catch your attention? What was the trigger catalyst? I mean, to some people, it's just some form of pain. In my case, it was, the total collapse of the Lebanese banking system and unofficial capital controls. But being so ingrained in finance, what was the thing that caught your attention and, the catalyst, the trigger?
So actually, what got me interested at first, well, I'd come across Bitcoin or whatever, but I'd never really paid interest. but there was a fixed income manager that, because I was managing multi-asset class portfolios, right? So I used to farm out parts of the allocation to various, asset class managers. And there was this fixed income manager, his best fixed income manager I've ever met. And he also, what made him really good was he had a fixed income arbitrage hedge fund, but then he also managed long only fixed income portfolios. And one time we were out to lunch together and he confided in me that he was personally heavily invested in Bitcoin, but couldn't talk about it professionally. And couldn't put it in client portfolios and stuff like that. And I was like, wow, this guy that I respect so much, is, heavily invested in Bitcoin. Okay, I got to take a proper look at this. And then I read the Bitcoin Standard, and that was like a light bulb going off in my head, right? Because it was like kind of like, I don't know what it's like because I've never been anyone else, so I don't know what it's like for anybody else to read the Bitcoin Standard, right? But for me, it was like there were so many things that had been confusing me for so long, that just didn't make sense about markets. That when I read that book, it was, I was like, because you know what the crazy thing is, right? Every investment return, the value of every asset, the price of every asset is denominated in the fiat currency, right? But it's the last place you look. You just sort of take it as like a measurement on a ruler, like centimeters or whatever, right? But with the money, it's like having a measuring tape that's kind of stretchy and it kind of contracts and expands. And so it's not a constant measurement, right? And so it looks like the asset's price is going up, but it's not really. It's the measuring tape that's changing. And so once obviously I knew what real returns were and stuff like that, but it just kind of deepened that whole kind of thought process for me. And then it turned out, so there was a private wealth division at one of the firms I was working at, and they were managing like ultra high net worth individuals in like family trusts and stuff like that. And they were getting a lot of demands for, I will say the dirty word, crypto exposure. And they asked for a volunteer, right? Because they didn't have a clue, right? And I was like already interested, so I put my hand up and said, I'll take that. And I basically set it all up for them, right? And then I wanted to come back to the UK, and Cartwright had offered me a job before, so I called them up. And when I re-interviewed, they said to me, would I, they actually asked me in the interview about Bitcoin. And so I told them what I thought, and they were like, would I head up their kind of offering in that space? So that's how I ended up there, and then that was kind of a few years of dealing with defined benefit pension schemes. So, so it was a journey.
Yeah. So you've had your light bulb moment. You've read Seyfuddin Ammus's book, and so now you're going down the rabbit hole. You're learning more about Bitcoin. What about skepticism from your colleagues, from your clients? And you may have had your own personal doubts. I don't know. Did you? What convinced you that this was more than a passing fad?
Yeah, jeepers, absolutely. Dealing with skepticism, criticism has been a big part of the whole thing, right? Both internally with colleagues and externally with clients. And when I first started discussing Bitcoin, the prevailing sentiment among colleagues and clients was overwhelmingly dismissive, it was often framed by them as a speculative gamble or a tool for illicit activities or a fad that's going to just sort of die. And with colleagues, the skepticism was often rooted in no understanding of what they were talking about whatsoever. And they're just relying on surface level narratives that they've heard in the media. Like Bitcoin's too volatile or it's bad for the environment. But it's also hard for TradFi professionals to wrap their mind around what Bitcoin actually is.
Sorry to interrupt, I'm going to just read you something that I read in an industry journal. Because around the time that you were doing your work with Cartwright, you were obviously being quoted quite a lot in the press on this subject. And there's a lot of other talking heads in the established industry people. One of these is in one of the pension industry journals. A gentleman argues that, and I'm just sort of reading off the screen, he argues that Bitcoin not only fails to align with the risk profiles of pension schemes, but is also ill-suited to their investment objectives. And his actual quote is, "It's a purely speculative investment. It fails on too many levels to be a suitable investment for institutional investors or even personal investors. The only real role it has for a personal investor is a bit of fun, as much as going to the horses or going to the casino." So how do you counter that? I mean, that's a real...
Yeah, I mean, look, so if I'm fair to clients, I mean, that guy's not a client, he's a journalist probably, right? But
this guy was an chief investment officer at Pensions Group.
Oh, really?
Yeah.
Okay, so fair enough. But I mean, the thing is, you got to understand that these people have been kind of, their thing is capital preservation and stability, right? And Bitcoin's perceived risks are too much for them. But what ultimately has helped me overcome the skepticism of others is doing a ton of research and work myself and then educating others. And I've made it a point to deeply understand Bitcoin's technical, economic, and philosophical underpinnings. For example, on that point of volatility, I frame it in terms of an adoption curve, right? I mean, anything new has to go through an adoption curve, right? It doesn't start as Google, right? And for clients that are brand new to it, I mean, I focus on connecting Bitcoin to concepts they already understand, like the scarcity of gold, but then I say there are these added advantages of absolute scarcity, portability, divisibility, verifiability, and then also tying it to the macroeconomic themes they're already concerned about, so very high debt levels, inflation, currency debasement, growing instability in traditional markets. So, over time I found that people's skepticism often stems from the language used to present Bitcoin, but by reframing it not as a speculative asset, but as a hedge, outside of the financial system against those systemic risks, a form of digital property, you can start to shift minds. That's kind of, because the thing is, you don't want to kind of get into a confrontation, right? You have to understand the perspective that people are coming from, right? There's a reason why they think these things. And, I consider myself lucky to have kind of fallen down this rabbit hole, because I could imagine myself being the one saying that. In fact, at a time, I probably would have been, right? Yeah.
That's very interesting. And since we're talking about, volatility, maybe we can talk a little bit about, the risk and reward mindset. So Bitcoin clearly is an asset class of its own. And typically asset classes have different ways to, weigh the potential risk and reward. So given Bitcoin's, nascent nature and being labeled by, I think, BlackRock as a class of its own, how would you weigh the potential risks and rewards of Bitcoin in comparison to the traditional assets that everyone is familiar with, especially within the institutional landscape?
Yeah. So the way I weigh the risks and rewards of Bitcoin compared to traditional assets, it requires me to step back and reassess the frameworks I'd used for years in traditional finance. Initially I approached Bitcoin as I would any other asset, analyzing its volatility. I mean, it's got nascent market infrastructure to a certain extent, although that's changing, And at first glance, to me too, it looked too risky for institutional portfolios. Where you mostly focus on capital preservation and income generation. But as I learned more, I realized that Bitcoin doesn't fit neatly into any traditional framework. You need a new lens. The volatility, while real, is different in nature. So, for example, traditional assets like equity and bonds are tied to the stability of monetary and fiscal policy, which is constantly manipulated, right? Bitcoin's volatility, on the other hand, is related to supply-demand dynamics, its 4-year cycles, its adoption cycle. It's now in an institutional and nation-state phase of adoption. There's a lot of technological development going on in terms of infrastructure surrounding the asset, and also regulatory clarity and the stance of governments. So on the reward side, what really stood out to me was Bitcoin's asymmetric upside. In traditional assets, you're often aiming for stability and the steady incremental returns, but Bitcoin presents this opportunity for exponential growth as a fundamentally new form of money and store of value. And, it's hard cap supply and decentralization give it unique properties as a hedge against systemic risks like inflation, currency debasement, and I predict financial repression over the next 20 years. So as I studied about it and had time to think about it, the risk-reward calculation started to shift in my mind. The more I understood that Bitcoin's resilience comes from the way it's designed and those 4-year cycle dynamics, the more I realized its risks are really short-term hurdles, while its potential rewards, are increasingly significant. And then, I obviously started to look at correlations to traditional assets, its skew, its kurtosis, and tie those back to its fundamentals, how Bitcoin actually works. And that was another big light bulb moment for me, because it made me realize that Bitcoin was the missing ingredient to varying extents for any portfolio, regardless of the risk-return objectives, as long as it had an investment horizon more than 4 years. So I started, seeing how adding Bitcoin to a portfolio, pretty much any portfolio would enhance diversification and therefore improve risk-adjusted returns. And so its standalone volatility is irrelevant, right? Over time, also as the infrastructure has improved, such as multi-institutional custody, and there's more regulatory clarity, some of those kind of things in the environment, those risks in the environment have also subsided.
So is that your core investment thesis? I mean, asymmetric upside, exponential growth. You're often pitching to professionals who are, seasoned in the TradFi industry. They're used to dealing with legacy TradFi assets, equities, bonds. They don't really look much outside those. Is that the core investment thesis?
Yeah, so what I mean by asymmetric opportunity, right? So what it means is that, so that article that you mentioned, right, where the guy says it's totally unsuitable, right? So I can put 2% in a portfolio, right? So what's the worst that can happen? Right?
You lose the 2%.
I lose 2%. So take a 60-40 portfolio. how much do equities have to move for me to lose 2% of the portfolio? About 3 and a bit percent.
Yeah.
Right? Well, that happens 5 times a year. Right? So that 2% in the portfolio is no more risky than the equity allocation. Right? But that 2% of the portfolio, right, can get me as much as like a 10 or 20% allocation to equities, right? And at the same time, it's an uncorrelated return stream, right? So my core investment for Thesis for Bitcoin, so I'd like to step back and go, it's about its inherent characteristics: decentralization, permissionless, okay, store of value, a hedge against systemic risks. It's like you said, Ralph, it's a fundamentally new asset class that complements rather than replaces traditional assets. And I can see that over time, more and more investors are starting to understand what we're talking about, including large financial institutions and now even countries. So there's this growing recognition, of what's driving demand and increasing adoption, as Bitcoin supply halves every 4 years. So, and we're still in the very early stages of this adoption curve, and so it's literally demand and supply, which is where the Ponzi scheme kind of thing comes from, right? But supply and demand is, ubiquitous. And it's also that Bitcoin is the internet of value, and we live in an increasing digital world. We've got AI, global commerce, innovations like the Lightning Network, and I think we've got at least 20 years ahead of us where, Bitcoin is going to be in a major adoption cycle. It feels to me like a moment, like in the early days of the internet, but also being able to clearly see, in those days you couldn't tell who the winner was going to be. But now you can tell exactly who the winner is going to be. But the thing is, the difference is that Bitcoin's total addressable market is far, far bigger, right, than all those big internet companies, because it touches everything from global money and payments to financial infrastructure to a global reserve asset. Its potential is greater than all of those FANG stocks combined. So that combination of scarcity, right, and that total addressable demand, I think it's a generational opportunity for investors who understand its implications, and are willing to take sort of a medium to long-term view.
It's very interesting. I want us to shift gears a little bit because, Glenn, you have a unique perspective on things. So there's very few investment consultants who are, so knee-deep into Bitcoin, and very few who've had the opportunity to work with a pension plan on a Bitcoin allocation. So maybe you can provide some insider information or behind-the-scenes type of insights in understanding, that UK pension plan that allocated, and I believe that was 3% to Bitcoin. Who brought up the idea first? Did the pension committee ask about it, or did you and your team put that on the table?
Yeah. So look, obviously I'm an investment professional, so I'll tell you everything I can, right? There's confidentiality and stuff like that, but so no, we took it to them. Okay. And we took it to them not as like a standalone kind of thing. We did it in the context of their portfolio, right? And the context there was quite unique, okay? It was so it was the defined benefit pension scheme for a manufacturing company, okay, a big manufacturing company. And the business, so the manufacturing company, not the pension scheme, its margins were being squeezed, right? We had just gone through 13% inflation in the UK, plus all the people working in the factories and stuff, the employees were feeling the effects of inflation, right? So knowing that, that's how I kind of framed the whole situation to them. You know, we spoke about, I mean, I took them right back into the history of money, right? Pre-gold, gold, fiat currencies, right? And, you know, a lot of people think that inflation's like the weather. You know, it's just like, it just happens, you know? It's just, oh, it's like very hot today, right? And so it's like, when you explain to people where inflation really comes from, right? Then they're like, oh, well, I mean, it's, you know, it's making life very difficult in our business. It's making life difficult for our employees. The next question is, what do we do about it? Right? And so that's why I kind of approached the situation like that, right? And then I explained to them, then it's because Bitcoin's very hard if you try to explain Bitcoin to somebody and they don't understand the problem. Right? If they understand the problem very clearly, right? So you know, you've got to do it in a way that pretty much anyone in the room can understand, right? You can have more and less sophisticated people in any audience, right? Then once the light bulbs come on and they can see the problem, then you tell them about Bitcoin. There's only ever going to be 21 million, right? Nobody can change it, da-da-da-da. Then all of a sudden, it's like, oh, so Bitcoin is the solution to the problem. It's not the speculative asset, this random thing that just, you know, people are gambling on or whatever. No, it is, you know, perfect money, right? And so with that as the sort of context of our conversation, it was, you know, I've spoken to a lot of pension schemes, right? And it's never easy. But this one was very easy, right? It was like 2 hours at the end of the meeting, they were like, okay, we want to do this. Right? Okay. And then it was, you know, in principle. You know, then it was a long journey from there, right?
What were the common questions? So you've got Bitcoin on the table now. You've got the foot in the door. You know, there's an in principle sort of, yeah, okay, we should consider this seriously. What happens next? What are the common questions and how do you address them?
Well, actually, in this case, I'll tell you about other cases to answer your question, but in this case, it wasn't like that at all. It was like, we want to make an investment. It wasn't we were considering. It was like, okay, we're going to do this, right? Although then, because there's a company, right, and there was also an international parent company, right, the financial director of the British business and the CFO of the international business, because they have to go to their sponsoring company and say, this is what we're doing, we're all good. And then they were like, you're not doing this, right? But then what we had to do was, you know, communicate with them too. And the way we did it was, I think the main thing, so this is quite interesting, well, it was an interesting thing for me to learn, right, is social proofing, right? Because what we actually did was we went through all the 13F filings and we made a huge, the report was only about 4 or 5 pages, but then the appendix was like, because we included all 1,100 financial institutions that up to that point, must be more by now, had made allocations to Bitcoin. And they are banks, they are insurance companies, they are asset managers, they are wealth managers, they are pension schemes, you know. And it was like, look, we're not coming to you with something just totally that we just made up and zany out of our heads or whatever, right? And we pointed out to them that BlackRock, Fidelity, Franklin Templeton, Invesco, included quotes of, what the senior people there had said, etc. And then it was waved through, right? So, but to your question, when it's not that easy, so the most interesting, let me start with the less interesting question, and then I'll tell you the most interesting objection I get, right? So the less interesting ones are about, it's bad for the environment, it's used by criminals and terrorists, all of these kinds of things. And so if they are willing to let me, I basically spend kind of another couple of hours with them going through the realities of, Bitcoin mining, its energy use, how it interacts with energy systems, all of that kind of thing. And actually show them that contrary to, the mainstream narrative, it's, what I actually show them is that out of all global industries, it is the one that uses the most renewable energy. And there's a very good reason for that, because, when the wind's blowing at 200 miles an hour, there's too much energy and nobody's paying for it, and that energy gets curtailed. Same with hydropower, same with solar, because they're not, they're not they're not supply flexible, right? It just kind of happens because that's the nature of the weather, unlike inflation. And I explain all of that kind of thing to them. I also obviously cover things like, it's illicit activity. I talk about the way I do it is I say to them, look, I understand why you think Bitcoin is used by criminals and terrorists, right? Because that's always in the newspaper, right? But I say to them, let me just ask you a question. Do you think dollars or pounds or euros are used by terrorists or criminals? Yeah. And then they got to kind of scratch, well, of course, And then I go, do you have any idea what percentage of Bitcoin's total transaction volume involves illicit activities? And they go, no. And I say it's about 0.2%. I go, what about fiat currencies around the world, right? And there's a UN report that I show them where it indicates about 2 to 5%, right? So I say to them, it's a fair objection, but then we've got to stop using dollars, euros, and pounds too, right? We can't touch those things either because they're used by... And then, but the most interesting question I get is, but how do we know that the supply of the 21 million, the hard cap supply won't be changed, right? And the reason why that's the most interesting question for me is because when people ask me that question, I know that that's the final question. Because they wouldn't be asking me that question if they didn't like the rest of the story, right? And so once they ask me that question, I'm like, okay, if I can answer this question properly, we're done. And so I say to them, look, it's your choice. I can give you the 2-minute answer, or I can explain the whole thing to you in depth, right? But it's going to take me about an hour, right? And if they'll let me, then I do. So I try to fit it into a framework that they can understand, and a lot in TradFi is about ESG, right? So we've done environmental. In the social part, I cover, how Bitcoin, it's more than half of the world, more than 4 billion people live in authoritarian regimes, right? And I kind of explain to them, how Bitcoin works in those types of environments, and with the unbanked, and with, the potential for CBDCs. And, I basically explain how Bitcoin fits with human rights, but then when it comes to the G, that's governance. So when you're talking about governance in a company, right, you're talking about the policies and rules and procedures by which the company is run, right? Like board of directors, chairman, all of that kind of stuff. It's the rules by which things are done. And in the Bitcoin world, there is governance, but the governance is computer code, immutable computer code, right? And so I have to explain to them the consensus algorithm, the difficulty adjustments, how the mining works, all of that kind of stuff. But again, I have to be able to do it in a way that, not everybody's not going to fall asleep, and also that everyone's going to understand. And I've got an hour to do it, right? And the most useful thing that I found to do that was Jan Pritzker's book, Inventing Bitcoin, right? So I basically learned that book off by heart. And I explained it through the lens of, building it up in kind of layers, and then putting the jigsaw puzzle back together. And then at the end saying to them, how would you go about changing? Or how do you think anybody could go about changing that hard cap supply? Right?
Very interesting.
Yeah, they get it.
So Glenn, how long did the process to basically get them to agree to allocate to Bitcoin take? And then after that, a second question attached to it, that's where the work started. So you got them to want to allocate to Bitcoin. And then I'm sure there was a very lengthy process to find the best way to allocate to Bitcoin. So maybe you can walk us through that and the process and the length of time it takes to get there.
Sure. So, I knew that we were going to be doing this. So I'd actually started long before figuring out how we were going to make an allocation to Bitcoin, right? So what did I do? I was like, okay, I need to know, this is kind of, this is the way I approach things. I'm like, okay, the only way you're going to find out the best way to do something is if you know every way to do it, right? So I went into Bloomberg and I went into the fund research part, and I typed in the word Bitcoin, and I got every single fund or vehicle, anything, and then I also put the word out for private placement vehicles and stuff like that, right? And I collected a list of I think it was about 70 different options around the world, right? And then what I did was I was like, okay, what do I want? So before I look at these things, what do I actually want? So I came up with 12 criteria for what I wanted, right? So for example, I wanted to work with somebody who is Bitcoin only, because I don't want to be in a situation where I'm recommending to our clients to be paying asset management fees to an asset manager who knows less about Bitcoin than I do. Right? Because if they understood more than I know about Bitcoin, they would be Bitcoin only, right? And but also because when you start mixing in other digital assets and stuff like that, you basically at the technological layer, at the custody layer and stuff, there's implications there. Because you're not using Bitcoin native multi-sig technology, you start using things like multi-party computation, which is black boxes, and also I just don't want them distracted by all this noise about Polkadot and Solana and whatever, right? I want somebody who's serious, right? But then also, in my own I've got a 5-key multi-sig wallet, okay, and I've got keys in different countries and, for my own personal stack, right? And I was like, there's no way that I'm going to take a pension scheme and put Bitcoin in a single custodian, right? It's like I'd be doing them a disservice if I wasn't thinking, when I do something for a pension scheme, it's only something that if I had a huge pension pot in that pension scheme, I would do for myself, right? So I was like, where is the institutional version of multi-sig? And there are some options, but they're all not Bitcoin focused, and they use MPC for operational efficiency and whatever. So I kind of searched the globe. I also didn't want, I wanted the pension scheme to have its own Bitcoin address, right? I mean, if you go into an ETF, tell me where you're going to go and check that your Bitcoin's actually there, right? And I didn't want gating provisions. I wanted in-kind subscriptions and redemptions. You know, I wanted this to be actual Bitcoin, not paper Bitcoin, right? And so it was so once I started to filter that list of 70, there was a handful left. And even from there, then on my kind of second tier criteria, I literally ended up with only one, right, at the end, which was kind of helpful because then I knew where I needed to do due diligence, right?
Okay.
So we hired a specialist operational due diligence firm, and they've done hundreds of operational due diligence on hedge funds, crypto exchanges, custodians, private equity, all the private markets, all of that kind of stuff, and spent like 9 months working with them, doing an operational deep dive and whatever. So by the end of that, I was like, okay, and look, we did have to make tweaks along the way and stuff like that to get things just how we wanted them. But by the end of that, I kind of knew it inside out, and I was, okay, this is the way we're going to do it. This is the only way I'll do it. But then once we had that meeting, they were like, okay, they want to do this, and got through the companies, then we had to do legal and tax reviews, because obviously, British pension scheme, American asset manager, money moving between jurisdictions, documentation, all of that kind of stuff. And so that was quite a journey too.
It's fascinating.
So you've now made this allocation, they've accepted it. How has it performed since then? How has it done? And has that influenced the fund's broader strategy? I mean, are they looking at other alternative asset classes as a result of this?
So the allocation was made. You know what's so funny about Bitcoin, right? I mean, I think everybody who is invested in Bitcoin or substantially invested in Bitcoin knows this, right? Is like, Bitcoin was at 108 a couple of weeks ago, right? Or however long ago. And now it's at like 92, 93, and it feels terrible. but what's interesting is this pension, the allocation was made near the end of October, and the price of Bitcoin then was 64.
Oh, wow.
So that kind of shows you, what I say about Bitcoin? It's like the perfect, what do they call it? Investor psychology, or what's it? Behavioral psychology.
Behavioral finance.
Yeah.
Behavioral finance.
Yeah.
It's like the master class, right? Because, I mean, that experience of like, oh no. And always when it goes from like 108 to 92, you do, even though you've got so much conviction, you're like, oh, no. And, but it's interesting, right? We got in at about 64. I admit we got lucky. We got in on a good day. There was like kind of a dip, and So what's that? 28 on 64. It's close to a 50% return, right? And that's over a 2-month period.
Yeah.
Wow.
So if you annualize it, it's like with the compounding, it's about 700%, right? But the thing is that, it's not about that short term. It's meaning, right? This is like allocation that's going to be there for 10, 20 years. We don't know. I mean, it's a defined benefit pension scheme, so if it does well, it'll get bought out by an insurance company. Yeah. But, certainly they've got a long enough runway and whatever. And in terms of has it made them change? I think it was the one thing missing from their portfolio. They had a lot of private markets exposure. They were not new to the world of alternative assets. But it was kind of the missing ingredients, and it was, a 3% allocation, right? Because, all these hit pieces that have been in the newspaper about it, right? It's like, you would think we had put 60% of a pension scheme. It's like, no, it's 3%, man.
Yeah.
They're individual stocks in the portfolio that are almost that high, right? Yeah. So just, get a grip.
Yeah.
And this is a global asset. It's, there's nothing with this potential, not even close.
Yeah, that's fascinating. Thanks for walking us through that. Quite insightful. Glenn, let's shift gears again, and this time on a more, personal note. So I'd love to understand your point of view of why investment consultants talking about Bitcoin, learning about Bitcoin is such a rare thing. Is it mainly because of political pressure? People don't want to put their necks out on the line, especially the big global investment consulting firms. You basically they're nowhere to be seen within this industry. I'd love to get your thoughts, just because you were in the trenches and you work in that industry. What do you think?
Yeah, so think about it, right? So I've worked in some really big firms. Okay, Old Mutual is about 7,000 employees, Sanlam 5,000 employees, right? Maybe more, I'm not sure. Wilshire Associates is a few hundred. Cartwright was the smallest place I've ever worked, right? The prop firm, that was 300 even, right? But it's like, because, so if what you know about Bitcoin is just kind of mainstream press, and, you never really had a proper look at this, and you've kind of, all you've ever heard from colleagues and stuff like that is this thing's crazy, all these bad things and whatever, right? Then even if you get it, okay, if you finally figure it out, you know that everyone else in your environment, that's what they think, right? And now you've got a career, you've got a boss, and you want to get ahead, you want to become, if you're an investment consultant, maybe you want to be the head of investment consulting, right? If you're a portfolio manager, maybe you want to become CIO, right? And so it's like, okay, I get this thing and whatever, but if I say anything, they're all going to think I'm crazy, right? And so it's funny, I'm a member of a group here in London. I won't mention the name of the group to dox anyone or anything, right? And it's all these financial services professionals in London who are all Bitcoiners, right? But they don't really talk about it at work, right? And, and then there's the guys. Again, I won't mention any names, but I've got quite a few in my head. They're kind of my nemesis, because, they're always in the papers saying the exact opposite, saying the perfect thing for the establishment, it's terrible and how irresponsible and all this kind of stuff, right? And you know what? I've had interactions with people and they know zero, nothing. Right? I once had an argument with this guy who basically said to me he's done a massive deep dive on Bitcoin and everything. And after all of that, so I said to him, okay, what's the name of the consensus algorithm? You know, what's the difficulty adjustment? You know, he couldn't answer one question. So these are people who know nothing about what they're talking about. They've read a few headlines or maybe a few articles in the newspaper and stuff. They're meant to be professionals, right? If they're going to speak in public, in the press about something, they should only be talking about things that they're fully informed on, right? And they're just mouthing off, you know, saying Bitcoin's this, but blockchain's the real thing. You know, and all these kinds of things, which if you know anything, right, it's, you know, it's farcical. So, but also, okay, so that's that camp, right? But then there's also the fact that, you know, if you just talk about correlations and skew and kurtosis and all of this kind of stuff and how it fits into a portfolio and whatever, it's like, yeah, but you could have said the same thing about Bernie Madoff's hedge fund, right? It was also going to be uncorrelated with anything else, positive skew, da-da-da. So it doesn't mean much just to look at, like, you know how they say correlation does not equal causation, or, you know, in other spheres, or like they could just be statistical kind of anomalies, like just, you know, based on the behavior of the crowd and the herd and stuff like that, right?
Yeah.
So, but the thing is, once you understand Bitcoin's fundamentals, right, that yes, it really is a decentralized fixed cap supply, you know, perfect money and whatever. But you can't just have somebody tell you that as an investment professional. You have to do the work yourself.
Yeah,
right?
but even when they've done the work, Glenn, I mean, you know, you talked about this group that you're part of that are finance professionals who are Bitcoiners, but in secret. You know, it feels like there's a stigma here. There's a reputational risk for, you know, TradFi financial professionals. How much of a barrier is that to widespread adoption?
I mean, I think it's changing because now you've got Larry Fink on CNBC and Bloomberg and whatever saying, no, this is a global asset. So that kind of, you know, breaks down barriers because let's face it, I mean, I've got a lot of experience, but who am I? Why should you listen to me? I mean, I don't think necessarily these sort of celebrities of the financial world, I mean, you know, they are very successful people or whatever, but I don't think they know more than me. But it means a lot more in terms of breaking down these sort of barriers and stigmas and stuff like that when those kinds of institutions are talking about this. I think it's unfortunate that they also talk about, you know, other assets and stuff because I think it reintroduces confusion.
Yeah.
And I mean, I think that it comes down to human nature, right? I mean, we want to get ahead in life. We've got careers, we've got families to think of, and all this kind of stuff, right? And so sometimes you keep your mouth shut. You know what I mean? Like, you know, there are a lot of controversial things in the, like, for example, with net zero or DEI or these kinds of things, you know, people might have opinions about these things, but they're not going to come out and say them in the wrong context and kind of have that damage their career and stuff like that, right? I mean, I think it's important for us to remember, right, that, you know, there's an establishment here. There is a Bank of England. You know, there is a US Federal Reserve, right? There are, you know, global banks, right? There, you know, and it's like, I mean, what are the implications of this for them? Are they all thinking this is brilliant news that this thing exists? No, of course not, right? And I mean, also, So here's something that I often say to people, right, that can kind of get to the heart of why. It's like, why is it that the financial services establishment may not be fans of this thing? You know, they may. And so what I say to people is, there's only three things you can do with money, right? You can save it, you can spend it, or you can invest it, right? I don't know, maybe there are others, but I can't think of any, right? But the problem is, with the money that we use today, national currencies, you can't save it, right? So you have to spend it, or you have to invest it, right? But why can't you save your money, right? And here's the thing. If there's a money that you can save, then there's going to be less investing, right? And so what do you think the investment management industry thinks about that prospect, right? So, you know, there's a lot going on here. But I do think that, you know, a lot of people can be reached. I think a lot of people have integrity. They, you know, if they see something, they understand things, they want to do the right thing, right? But the thing is that it takes work, right? And you have to be motivated to do that work. And I think the reason why they lack motivation to do the work is like, okay, I'm going to do all this work, and now I'm going to have to say things at work that are going to be controversial and may affect my career. So what's the point? I'll just, you know, say no, it's bad, and not look at it. Yeah.
Yeah, we're getting close to the end of the podcast, Gunn, but there are a few questions just real fast that I'd like to get your thoughts on. So with everything happening all around the world, Bitcoin making all-time highs, rumors of a strategic reserve in the United States and in other countries that are being considered now, where do you see the institutional segment of the market and Bitcoin within the next 3 to 5 years? Are we going to see more allocations in your opinion, or is it just lip service? And then to wrap it up, what would you give in terms of advice to institutional investors or asset allocators when it comes to Bitcoin and Bitcoin allocations?
Yeah. So I think we are going to see, I think you could kind of, so in the next 3 to 5 years in the institutional space, what are we going to see, right? We're going to probably see 3 different camps, right? We're going to see just paying lip service to it, either good or bad, right? That's camp 1, and probably the largest camp for the next 3 to 5 years, right? But then we're going to see quite a big camp making a small allocation. And then we're going to see probably the smallest group making, you know, a good size allocation, right? And I think also it depends what happens at the nation state level. You know, like I feel like, so in the US, they're talking about a national strategic reserve. And, you know, there's obviously this bill by Senator Lamas where they're talking about buying 1 million Bitcoin. I would give that a low probability of actually happening. But I would give a decent, maybe a 50-50 probability that they take the confiscated Bitcoin that they've held, that the Biden administration haven't managed to quickly sell off. You know, they've just moved a whole lot more. And converting that into a reserve, I would give that about a 50-50 probability. And if that goes through, right, just the fact that they've got this thing called the Bitcoin Strategic Reserve is going to act like a green light, you know, to a lot of people. And I know from conversations that I've had myself and also that people that I know have had, that there are a lot of people, you know, big investment banks and stuff like that, reinsurers and stuff like that, kind of waiting on the sidelines for this new administration to see what they do, but they're kind of doing their homework and they're getting ready, right? And so if you're just dismissing Bitcoin and it's just bad and whatever, you're not going to know any of this kind of stuff. And you know, so I think it could go faster, but if I'm kind of, you know, prudent, I would say the, you know, very large majority of institutions will kind of, you know, start considering it'll be more psychological exercise. They may pay it some lip service. But in terms of actual numbers, there's going to be a substantial cohort that are actually going to make an allocation, a smallish allocation. And I think there's going to be a certain number that are going to go, you know, I mean, we're seeing some institutional players saying, you know, big allocations, right? And I think that is also related to the state we find ourselves in. I mean, you look at the UK, right? UK is meant to be this, you know, financially stable, advanced economy with a very stable currency. You know, you don't think of it like Venezuela or Lebanon or something like that, right? But look at it, right? It is, it's got the highest debt levels ever, okay? But then you add the unfunded liabilities and it's just insane, right? And very poor economic growth, a government with a massive social bent, with a penchant for spending, huge fiscal deficits, right? We had a guilt crisis 2 years ago. We had inflation at 13%, well, official inflation at 13%, right? You know, it's basically if you take a scorecard for an economy, right? It's like bad. What mark do you give? E plus. Okay, and so you know, there's a good possibility that the next 20 years for the UK looks a little bit. It sort of, I wouldn't go as far as to say, but it starts to look like, you know, the first
third world
20
country.
bad years for Argentina.
I love,
You know
I
what I
love the
mean?
Cameron rating agency E plus for United Kingdom.
So it's just like, so you know, if you open-eyed, and I know none of that's politically, you know, it's not politically correct to say or anything like that, but I mean, open your eyes. It's a reality. You know what I mean? Like, let's be honest. I mean, it's not unpatriotic. If we don't diagnose the problems, we're not going to solve them, right? And so what are you going to do? What are you going to do? Everything else is measured in this thing that it's obvious. History tells us what comes next.
Yeah.
Financial repression and currency debasement are the only way out. Unless we get to change that situation in the UK, right? We would not need another Margaret Thatcher. That wouldn't work, right? We would need 350 MPs that are of the equivalent character of Margaret Thatcher, right? And that is not going to happen, right? So politically, what is politically feasible? You know, what needs to be done is not politically feasible, so it's not going to be done. And so therefore we are going to be, and that's why this place is so unfriendly to Bitcoin, because it's capital controls. That's what it is. You can't take your money outside the system.
Yeah.
Right?
I think that's a great way to close us out. Maybe one final question from me is, if you could share one key takeaway in your journey from TradFi to Bitcoin as an emerging asset class, what would it be?
I mean, I think it's that you know, I mean, this is a trope. This is, you know, been used 1,000 times. But, you know, like if you go to a fish and you say, you talk about water, it'll go, what's water? You know? And that's how we live with money. You know, people that are friends of mine and stuff, I mean, they're so sick and tired of hearing me talk about these topics. But it's like, I say to them, do you understand that money it's everywhere, right? Whether you like it or not, you can think what you want about money, but the dining room table in your house is one half of that transaction was money, right? Everything in your wardrobe, your car outside, the house, right? If you're having financial problems, it's going to start to affect your marriage, your family life, right? Money touches everything, right? And it's like we look everywhere else. We look at the value of this. We look at the stock market. We look at the bond market. We look at housing prices. We look at, what our groceries cost. But we never look at the actual money, right? And I had a 20-year career not thinking about that, and the thing that opened my eyes to this was Bitcoin. So, you know what? What I've said to colleagues of mine is I've said, okay, look, I don't care if you never invest in Bitcoin. I don't care if you're ever not a proponent. But let me give you a reason to learn about it anyway, right? Is it's going to make you a better investment professional. Because you're finally going to understand the unit of account, the measurements that you're doing everything in, and you can understand it's going to give you a window into that kind of angle on it all. And I promise you, when CPI is 3%, we did an analysis where we looked at, we took the money supply in the US, and I think they call it, the equivalent here is called M4. And we looked at the compound annual growth rate for the money supply over the last 60 years, first for both. And in the US it was 7%, and in the UK it was 6%. And then we looked at it over the last 20 years, and in the US it was 12.3, and here I think it was just above 10, right? And like what people don't know, most people don't know this, is the word inflation was changed at about the time that Keynesian economics was adopted. Before that, it actually literally meant the increase in the money supply. And then it got changed to mean a rise in prices. And so the thing is that, if productivity increases by 5%, prices should fall by 5%. Mm-hmm. But if inflation's 2%, price rises are 2%, right? Then they can increase the money supply by 7% and prices will only go up 2%, right? But then also you can change the inflation basket, right? Yes. And all this kind of stuff. So like when investment professionals are saying, I got a real return of 4% or whatever, it's like, well, yes, if you measure it according to CPI, right? But I mean, essentially, and that's why everybody just kind of chucks everything into an all-country world index. Because, I mean, it doesn't really matter. Valuations don't matter anymore, right? All that matters is what the Fed do, or, if the Fed are easing, everything's great. If it's, so it just becomes, if you want to make your job interesting as an investment professional, learn about Bitcoin. Because when you get that, all of a sudden, a whole other stuff that doesn't make sense is going to make sense.
Amazing. Thank you so much, Glenn. We're going to wrap it up. It was great having you. I think, there's a lot more to talk about, so make sure to bring you back again sometime in the near future. And good luck with your endeavors. And thank you for giving us, a peek inside the investment consultant world and your experience with the UK allocation. Thank you so much.
Yeah, thanks so much for having me. Yeah. Sorry if I was long-winded. I get passionate about this stuff.
No, man. We're all the same.
Yeah.
See you guys.
Thanks. Bye.
Bye-bye.